Good day. This is Joe from Ask Joe About Money, and it is February 7th, and we are doing our daily after market review. We trade the ES, in my case, the MES, which is where I execute my trades, but it's the same market. It's a micro market. And we always start out with the 60-minute chart. And we could see that going into today, we are still in a period of higher highs. Yesterday's market was range bound. Okay, so essentially, just to recap, we broke above resistance. We tried to find buyers. We failed, came back down, and now we are in. This here is a 50%. Market went up, and we're right at 50%. So that's where the market traded yesterday. And so now that just gives us context, as we always look at, whether we're going to go long or short. We don't know, and we're going to see what happens. So let's go ahead and switch to the 5-minute chart. All right. So here was at the market open in the live room this morning. What I was talking about was this was yesterday's price action, and we built a box around that price action. And basically, when I see a trading range like this, you want to be buying at the low end of the range and selling at the low end of the range. Now, eventually, we know the market is going to break out of this range, but for the most part, we don't want to be doing too much shorting unless we see a decisive breakout, and we don't want to be doing too much longing unless we see decisive breakout to the upside. So let's see what happens. The market opened. It's a green bar. Another green bar, red bar. Okay, so far in the first 30 minutes, okay, what we're looking at here is a range bound open. Again, I'm just observing, okay, as we keep going through. I drew this in at the time because at the time what I was thinking was that, well, we have a lower trend line here. If we saw a big red bar closing below all of this here, I would be willing to get short at the close of that red bar. But that's not what we ended up getting. So the market holds support. Again, this is a very muted open. And I rarely trade the open, but it gives us a lot of good information as to what's going on. Now, remember, that could change at any point. Okay, that could change at any point. Then we see a green bar. Okay, and so what I'm thinking at this point is that, for me, when we're trading in a range, I see a green bar, and this would generally get me interested to look into a long. The only issue that I have here is that if we're looking at this box, we're right at the middle of the box. And so now, right here, this is already going to be a profit-taking area for now. So I'm not interested in this long only because of the context, right? We have to always remember the context. What do I mean by context? Well, if I just showed you this bar without seeing anything that happened here, you may say, well, Joe, this is a good bar to go long on, and I wouldn't disagree. But chart patterns on their own don't mean much until you look at the context. So my thought process at this point is, yes, that's bullish price action, but for me, I need to see decisive price action, either coming up to resistance, like really strong price action coming up to resistance for a follow through, or I'm gonna wait, because this just could easily fail and go back down. So let's see what happens. So a couple of smaller bars. Okay, now we have, again, this is good bullish behavior. This is really good bullish behavior. But we're coming into our sell zone. Now, sell zone doesn't mean go short. Okay, what sell zone means, is that we know is an area of resistance. How do I know that? Because that's what happened yesterday, as a matter of fact, and also the day before. This is an area of resistance, so we know that. So let's see what happens. Okay, this is strong price action, right? So now I'm starting to believe in the bullish case. The issue is, we're in the sell zone. So I'm not going to initiate a position here. I'm going to need to see some decisive action in order for me to initiate a position. So here we're holding off for the time being. As you can see, this is what I was worried about, because we can't be surprised by this, because this is our sell zone, okay? and I drew this in this morning, or I should say, I drew this in at the market open. The market pulled back. Now we're at about 12:30. All right, now at the close of this bar is where I get long. So how do I manage that? Okay, so the way I manage that is I get long at the close of that bar, which would be there, and my stop would be below here. Okay, so there's my stop. So I am long from here and my stop is down there. Okay, so let's see what happens. Another big green bar. Okay, so now, okay, at this point, I'm looking at this and I'm saying, okay, well, I do want to move my stop up, but I can't because, again, your stops need to be managed based on price action. Now, my stop is down here, but I'm going to be looking for some type of topping action here for a reason to get out. But this is another even bigger green bar with no wick. It closed well a little bit. It looks like this is a one tick wick at its size. So this is not an area where I want to get out because it could continue going. Let's see. And another green bar. Okay. So now at this point, I will move my stop. Carry this box over. So we started our stop down here. Now we're going to move our stop to the bottom of this bar, and that's going to get me so right now I have that would be 1R. I mean, I have I have about 1.5 R in hand. I don't want to give back this much, but again, my stop is based on what the chart is telling me to put it, so I'm not going to put my stop close because you don't make the big moves with keeping your stop close. That being said, if I see indication up here because of the market stalling out, I could get out at any point. So I don't have to wait for my stop to get hit, but I've locked in at least this much so far. Now that I see this, okay, now what I'm going to do is, because now they tried big wick on top, okay, they tried all the way up, failed. So now I move my stop all the way to up here, locking in about 1.5 R. Okay, and I'm out. If we look at the trade, there's a couple things we look at. This was the risk. Okay, the maximum favorable excursion. How far did it go? It went this far. We captured this much. And we gave back this much. This should actually be, oops. All right, so this was how much. So this is, let's color code this. So this was our initial risk. That was our initial risk. This was what we captured. This is what we captured. This is what we gave back. And this was the total. We could leave that. Let's make that. Purple. Oh. So purple. So just kind of like this is the geometry of the trade. This is how the math works out to be. So basically, this is the risk. Here was our total reward, and we captured just by visual inspection here about 2/3. It looks like, so pretty good, right? So as long as my stop is preserving about 2/3, I'm happy. All right, so that was a nice trade there. So let's see what happens here. The market comes off. at this point, when the market, I believe Powell was speaking today. So this is now at this point news. So I'm going to be sitting this entire part out. This is still news, and obviously big red bars. Now, this is a trade here where I have a little bit of a rant I want to go on right now, is because after I saw this, I basically, and this is a lesson for myself and for everyone, is I started to believe on the short side, which meant that I didn't allow myself to be open-minded to the long side. Because generally, when I see a move down, if I start seeing green bars, I am thinking long because there could be a retracement. But in this case, I had a belief, and my belief stopped me from doing that. And let me show you where. So what happens here? Let's kind of play it through. Big move down, decent sized green bar, and they actually took it all the way up here, but you expect them to sell it because of this move. But now what happens next time it comes down here? They buy it. All right, so now it made a higher high. Okay, so now this isn't bottoming type action. Then at this point, a huge green bar. Okay, now I wouldn't have been long at this point, but at this point, I would be long. You have 1, 2, 3 green bars, and one being really big, and they're accelerating up. At this point, my trade would have been, and again, I didn't take this trade. So again, this is part of trading because I was not mentally prepared, and I paid the price for it in terms of not getting. So that was my initial risk. Okay, big green bar up, another green bar, another green bar. Okay, this is big barely, put a red bar in. Okay, now that's kind of looking like topping action. So now at this point, what I would have done is just move my stop to the bottom of this candle right there. And another green bar. Now it's slowing down. Still keep my stop there though. Another red bar. At this point, move my stop up there. Keep the stop there and out. This part of the trade, that would have been a 1-hour trade, and I did not participate in that. And the reason I didn't participate in that was because I didn't have my mindset properly. I also have a swing trade that I want to go over, and this swing trade is in gold. Again, big picture, when we look at my swing trades, I'm trading off of a 15-minute chart, but I want to just kind of show the action. Obviously, gold has been on a huge uptrend in the last past months. Then we failed up here. We came down. We had a big move down. As you can see on the chart, I mean, I haven't seen, if you just measure the magnitude of this move, a down move like that. I mean, I haven't just, if you, in terms of this whole chart, that's a really big down move. So it's finding support here. And how do I know it's finding support? I know it's finding support because I see it's a trading range. And now we're trading in this box, right? So now in a bull market in gold, I don't know what's going to happen, and I'm not predicting, but what I ended up doing today is, let's go to the 15-minute chart. So my trade here in gold was when I saw this is the trading range, right? And when I see this, so this is bottoming action. How do I know it's bottoming action? It stopped going down. Okay, came retraced and made a higher low. All right, higher low, higher low. Once I saw these higher lows, I bought at this candle here. So my risk, so I bought right there. Which is kind of like a left shoulder, head, right shoulder, and which would mean that my risk is going to be like this. So this is my risk right now. That's my risk. All right. So we're just at about entry with this gold trade. And again, this is obviously we're on a short-term downtrend over the last couple of sessions, so we have to deal with this. But the market could easily get back up to this zone and then ultimately up to here. For now, we're gonna see what happens. Buying at support. I keep my risk tight. I see multiples of these risk boxes available to the upside. So we'll see what happens. This could turn into something where this is indeed a top in gold and we break out to the downside, and then I want to go short. But at this point, I'm going to go with the theory that it's going to resume its uptrend. And if it doesn't, that's okay too. But that's it for today. And we will see you tomorrow morning at 9 a.m. for the market open. With that, trade well and manage your risk.